Hello, traders. Gary Wagner with the Gold Forecast. It is the 5th day of January, Wednesday, approximately 11 o'clock here in Honolulu, Hawaii, and this is the Daily Report. Gold is currently trading off about $5.40, but that's not the real story. The real story is gold, due to predominant buying, is actually up about $8, but the very strong upward move of the dollar is pushing it down about $14, giving it a net change of about $5.40. On today's report, we are going to be taking a look at a very interesting candlestick that is called a hammer, and why that hammer can be found at the bottom of the market and works very much like stars and dojis, all here on today's Daily Report. Traders, do I see a potential bottom or end to this correction in gold? Well, quite frankly, actually I do today. And let me explain a couple of my observations. As you know, whenever we see these corrections, I look for a particular formation to appear in the market. I call it a variation off a three-river morning star. And simply what that is as the market comes down, you get a black candle and a down day. We certainly got that yesterday. And then that is followed by a star-like candle. In this case, we've actually got a hammer. And I'm going to talk about that hammer in a little bit more detail in a second. But it does appear as though it has found really good support. This 1365 area seems to have given us this double bottom here and found tentative support. I do like that. And then the other thing that I look at, as this market has moved up, even though we've had series of corrections, when we take a look at the lows, our low here, our low here, here, and here. If in fact this holds, we have had a series of lows, a higher low, and a matching low. That to me is indicative of a market that's moving up. The other thing that's indicative of a market moving up is that as we hit our tops on a market that is changing momentum and going from a bullish market to a bearish market, you would get a series of lower highs on these tops. Although what we've had is this triple top. Now, in an article that I have just submitted to Kitco, I talk about the fact that when we see these double and triple tops in gold, it is a point when it's attempting to take out a monumentous obstacle, and it takes more than one pass to take it out. And that's exactly what I think we're seeing here in gold. Now, traders, let's take a look at this candlestick that we are forming today in today's market. I've blown it up a little bit, and this is absolutely a hammer. The idea behind a hammer is that as the market trades lower, you have to have the market in a downtrend, first of all, for it to be called a hammer. The market will open and then trade lower. But at some point during that trading activity, it finds a floor. It finds a point in which fresh buying comes into the market, and that in fact pushes the market back up to where it closes near the open of the day, thereby creating this small body right in here, and it is said to hammer out the market. This particular candle type is every bit as valid when we look for bottom formations right in here as these patterns that we saw. This is a variation of that three-river morning star. That gave us a buy signal. This also right in here gave us a buy signal. That is a variation off of that three-river morning star. So traders, what am I suggesting? My belief is that if on the following day, meaning tomorrow's trading activity, we get our red candle that looks something like this, I'm just drawing it in, we now have that three-river morning variation that we look for, and that issues a buy signal. Aggressive traders, I would still be a little hesitant to enter the market. I really think that we should wait for this confirmation. However, as soon as we see this confirmation, if we start getting a rally in which we have a red candle forming tomorrow and this market begins to move higher, my recommendation is going to be to enter the market from the long side. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily review. Bye-bye.